All right, this is chapter 13 homework help video or homework kind of showing you how to do some of this stuff. Has anybody seen Tron before? Um, every time I want to start one of these, I want to say greetings programs, but if you've never seen Tron, then you won't have any clue what I'm talking about. We're gonna go ahead and just like I said always, we're gonna just work on the problems. Usually I do 10 multiple choice. Yeah, multiple choice. Okay. You can do the multiple choice. But we'll work on these ones here a little bit together. Prepare the journal entry to record Zendy Company's issuance of 90. Oh, this one's too easy. By easy, I mean like you can get this out of watching one of the snippet videos or whatever to kind of get how to do this. So I'm going to let you do that one. Date of declaration on dividends. Yeah, you can get this watching a snippet video. So let's skip that one. Data declaration distribution of stock dividend also can be done on a snippet video. Record the declaration of a 57% stock dividend. This can be done on as well. Belkin Incorporated has 117,000 shares of $3 par value common stock. This can be done. I'll give you a hint though. This is a large stock dividend. So I'll let you guys mull that one. And all right, this one's a cumulative versus non-cumulative. I guess I did snippets on all these, so I guess I want to do some of this to help you out. Let's do this one. Let's start with this one here. So we have all this situation here under the two classes stock. What would be if it's non-cumulative preferred stock versus the common? So in year one, we have total cash dividends of $620. Wow. Look out. We are rolling in the dough. Take me to that Caribbean cruise. Okay. So we have $5,800, excuse me, shares. We're going to multiply that by 0.12, which is going to give us $696 owed to our preferred shares each year. This is non-cumulative. So in year one, all of this dividends, because it's only 620, doesn't even cover the preferred shares. So we're going to put 620 here, but we already calculated how much they're getting the next year, and it was 696. All right. That's what they're going to get in year two. And the remaining amount will go to the common shareholders after that. So 2290 minus 696 is 1594. And just in case McGraw Hill wants me to put a zero in there, we'll put a zero in there to say, yes, I know nothing goes to that one. Well, I must have calculated it wrong. Let me go back to my math, or I must have typed it. Oh, I put, no, what did I do wrong? 5,800 times 0.12, 696, 696. The par value's thrown. I forgot the par value. Sorry. Multiply the shares times the par value. Brian, come on, times 0.12. 1392 goes to the preferred. All right. See, even us accountants, us CPAs will miss something just in case. So we're going to take that 2290 minus the 1392, 898. Okay. Check our work this time. There it is. All right. Sorry about that. Sometimes I forget little things too. Anyway, $2. Remember to multiply your shares times par value to get that amount and then the percentage of preferred stock. Compute the dividends each year of the two classes of stock, assuming that it is cumulative. Okay. I'm being stupid now. Pull up the calculator again. It should be the same in the year one as it was before if nothing's changed. So we're gonna go 620 and 0. I guess I didn't need to do that. 620 and 0. So the difference here is now we're gonna have some in arrears. So we are owed 1392 every year minus 620. So we're owed 772, and then we're gonna add the 1392. So we're gonna get 2,164 in year two. And minus 2290, 126. Okay, so just so that you know, I'm sorry, I kind of do this fast sometimes. So because this is cumulative, we have 620. We're still getting the same amount in year one, but in year two, we're not only going to get our normal amount, which again is that 13. Oops, that 13. I don't want the. Darn it, this stupid history thing. It always messes things up. Okay. So we're owed every year 1392. In year one, we didn't get paid that full amount, so we're owed some money. We're gonna take out that 620. So we're owed $772. So in year two, when they declared the $2,290 worth of dividends, we're gonna get paid as preferred shareholders that 772 plus that amount, 7072 plus our normal amount. Okay, so we're owed 2,164, but the total amount was paid out was 2,290. So we're gonna go 2,290, and we're gonna subtract out 2,164 to get us $126 to the common shareholders. Yeah, commons, they're kind of hosed in when it comes to that. Hopefully they get a little bit more money next year. Okay. Anyway, if you're confused a little bit on this, go to my snippet. It goes over it a whole lot better. That'll help you out, okay? Oh, this one was fun. We'll do this one. Okay, I can already tell it's gonna be great. Prepare journal entries to record the following transactions, and then prepare the stockholders' equity section after the October 11th treasury stock purchase. All right. Purchased 7,400 shares of its own common stock at $49 per share on October 11th. Prepare the stockholders' equity section after the October 11th treasury stock purchase? Why wouldn't we wait to do it at the end of the year? I think that might be a misprint. I think that's weird. Journal entries. We bought our own stock. Okay. So we're going to debit treasury shares. And I wish it would let me do formulas in those cells. I hate having to call. 7,400 times 49 bucks. So we're going to get 362,600. And then cash is going out 362,600. That was the right amount, right? Yeah, okay, good. The next journal entry, record the reissuance of 1,600 shares of the treasury stock for $55 cash per share. So we sold it for more than what we paid for it. That's good, right? 55 times 1,600. So we're getting $88,000 cash. And then we're going to credit our treasury shares by the amount we sold times the amount it cost us. 1,600 times 49. So we're going to do 78,400. And then the rest of it's going to be additional, what do they call it again? Excess. Paid in capital treasury stock. See, you just got to kind of hope for the best sometimes in what they call it. I don't remember. 88,000 minus 78,400 is going to give us 9,600 in our additional paid in capital. Then we sold all remaining treasury shares for $48 each, $1 short of what we paid for it. So number of shares was 48. Or I mean, the amount we paid was 48. And then we had 7,400 minus 1,600. So we had 5,800 shares left times 48 bucks. So we're getting 278,400. 278,400. That's the amount of cash we're getting. We're going to get rid of all of our treasury shares. And total treasury shares was the 5,800 times 49. So we're getting rid of 284,200. So the difference is going to come first out of the additional paid in capital. How much did we? Well, let's first out how much we have here. minus 278, 400. So we have $5,800 that we need to do. We have 9,600 in our paid in capital account. So we can come over here. Oh, why did it do that? We're going to take it out of our additional paid in capital treasury stock for the remaining amount of well, it's 5,800, right? 7,400 minus 1,600 times 1. Yeah, it's 5,800. So we have that. We're going to chunk it in here. So let's check our work and see how we did on this one. All right, good. All of our journal entries are accurate. So that's what's important. So I'm going to use the snippet tool again. I'm using the Windows sign, Shift S, so that I can come over here and I want these journal entries to come with me. All right, this is a way you can do this. It automatically copies it to my clipboard. And I'm going to open up a Paint program that comes with the computer, and I'm going to paste it there so I can see on my screen these transactions, because I'm going to need to come over here and adjust my stockholders equity section now. All right. Sadly, let me see if I can zoom. I got to zoom in is the problem, but I don't need as much on this one. So let me reduce that a little bit and get a little bit more here. All right, let's see if we can do this. So right now, we're looking at all these transactions. Did any of these impact our common stock or our additional paid in capital for common stock or retained earnings? The answer is no. We haven't touched any of these accounts. So let's go ahead and we're going to populate this, and we're going to go return to question and go to problem B. Or number 2. So we're going to come over here and we're going to put common stock at $10 par. It's just going to be, we're just going to bring it down, whatever it was, because we did not do any transactions that impacted 960,000. 960,000. And then our additional paid in capital, 336. And that is our paid in capital. Okay. So that's our contributed capital. So what's going to go next? Okay, we're going to deal with our treasury stock next, I'm guessing. So let's go ahead and do treasury stock. And what we need to do is, how much of our treasury stock do we have? Well, we have 0 left. So we're not going to put it on there at all, actually. So I'm sorry. Let's go ahead and put our retained earnings. And our retained earnings is unaffected. 1056. 1056. And then our additional paid in capital. Oh, come on, treasury stock. What did it do? Okay, what other entries? What do we got here? I guess we're going to add cost of treasury stock. That's not what I would call it. That's really awkward. What do we have left in our additional paid in capital for treasury stock? Well, we had 9,600. We're going to subtract out the 5,800, so we have $3,800. Let's see if we guessed right on which account they wanted to. I wanted additional paid in capital and treasury stock. Okay, didn't like that. So let's return to the question, see if we can figure out what the crap they want to talk about here. It can't be subtract. Okay, I figured out what I forgot they had said to do this after October 11th. I think that's stupid. Okay, so what they want us to do is they want to do less cost of treasury stock, and so we're going to do a minus 362,600. I don't know why they would want us to do that, but they did. There you go. I'm sure. Yep, that's the answer. I think that's ridiculous. They should have let us do it the full thing, but Who am I? I'm just a professor. Okay, so let's go to the last one here. The last no. Okay. All right, sorry. Next one. Let's look at the last one here. Cash dividends declared and paid. Okay, so prepare a statement of retained earnings for title company for the current year using the following data. Cash dividends declared and paid in the current year. Oh, statement of retained earnings. This is easy enough. Cash earnings in prior year. Okay, so our beginning balance here, retained earnings prior year, is going to be 33,800. Okay, and we're going to add our net income for 33,800. We're going to subtract out dividends declared. Interesting, it says dividends declared and paid. It doesn't matter if they were paid. If they declare it, it's out of your retained earnings. Remember, we're not a cash. We're not a cash basis entity. So that's how you do the statement of retained earnings. Oh, did I screw that up? Oh, I did. I reversed those. Should be the other way around. Trying to do it too fast. Retained earnings in the prior year is 60,800 plus net income 33.8 less cash dividends paid. Okay, that should be right. Oh, we want to subtract this. Sorry, sometimes, I get too fast. Basically, I build models, so all I got to do is just plug in the numbers, and so it works for me. So there you go. Fix the numbers. That's your homework, guys. I hope that helps. A lot of the snippets are going to help you too. So if you have any questions, please feel free to reach out to me. I'll be happy to help you with whatever homework problems you might be having. Otherwise, good luck. We'll see you guys in chapter 14, if not sooner. Take care.